Welcome traders to the world of investment trading with Stocks Trader Pro. And in this video, we're just going to quickly look through what you're going to get in the course. Now you can see down the right hand side, we have many videos. Now you'll notice that these videos are short and sweet and to the point. Now that's the whole point. We don't want to cause any confusion. We want you to fully understand exactly what you're doing when you're taking trades, the same way as I do and have done for the last 15 years. So we have the welcome section, which you are in now. We have the Mastering Trading View. Now Trading View is very important to me and you can get a free version of this. Same with eToro. As well, I trade a lot with eToro, but the platform is down to you, what you prefer to use, and obviously down to what country you are in as well. We then have the Stocks Trader Pro strategy right here, and then we have some examples underneath that. We have risk management and developing the trader's mindset. Now that's an investment trader's mindset. We're trading the daily chart, not fast time frames, and we can hold for days, weeks and even months if we have to. And the reason being is it's going to work in our favor in the long run. Now we have this section at the bottom, which is basically a bonus section. Sorry, it's a little bit further down. Yeah, the bonus section here. And within the bonus section, we're going to talk about all the different things that are happening in the market, and we're going to have updates in there. So good luck with your trading. Please take your time going through the videos and reach out to me if you have any questions through the Q&A section just down here. So here we are on Trading View. The first thing we are going to do is create an account. So the first thing you want to do is put yourself a username in there and then click the next button. Once you've done that, you want to go to Launch Supercharts. You can do that by going into Products and clicking on Supercharts. You're going to be asked for your user ID so we can send you the indicator. All you need to do is go up to here and that's it there. So you just need us to send that username and then we'll be able to set you up with your indicator. When we get to the charts, we want to just click on the volume at the bottom, which is automatically put there, and just delete that so we have a completely clean screen. We have the daily chart up. You can see we're on Apple here. And then all we need to do is go to the right hand side and then we can start adding our different features, which would be what we want in our watch list. Really simple. Let's add something to the watch list. We click Add Simple and then do a search. Let's just say we want Amazon stock. Click on there and add it to your chart. Now you can see it's at the bottom here. All we need to do is just to move that up and put it to wherever we want it to be. Have a play around, add a lot of the stocks that you have a list for. We don't want the Forex on there. Let's just make sure that we get rid of anything to do with Forex. We can use these two. The other one we want is Sol. So there we go. We'll put that on there as well. Sol futures. We have that on here now. We can keep that under our crypto. We can keep our futures here. We want silver, gold and oil. Then we want our stocks. We don't really want SPX in here. In fact, we don't need any of these because these aren't what we're going to be trading. So we can just delete all of them and we can start adding as many stocks as we want to. There's another video to show you how to add the indicators simply under here. So we add the indicator from there, and then we want to set alerts. We simply add the alert from here. That's all you need to do on this. Now, when you don't have a fully paid plan and you're just having free, you only get so much data, which is fine because you don't really need much data for the daily chart because we're basically working on what's happened over the last 12 months. And as you can see, we get all of that here. Very simple. So don't forget, the one thing that's the most important is to send over your username so you can get access to the indicator. On here you can go up to the top and you can save whatever layout you want. Now you can have different layouts. With the free version you can have this layout and this layout, but once you get into these it has to be a paid membership. So really we only need to use this one anyway. So the single one, we don't really need to save it either. We just need to be able to use it to go through our different stocks, check them out, see where they are. The same with oil, gold, silver, Bitcoin, Ethereum and Solana. And that's it. Very simple. Again, there's nothing really complicated on this. I don't want to see this, but you can see it, and when you go on here it'll give you a little bit of information on there. There's loads of bits on the side. That's where your alert's going to be. Loads of different types of information, chats, and there's also, of course, you've got your stock screener as well on the right hand side, which was going to be really invaluable to you, which we'll go through in another video. Hello traders, and welcome to another video in the series. And in this video we're going to be talking about using the fib tool to draw the lines on the chart rather than using the indicator. As you can see, the indicator also has a built-in alarm system, which you'll see in the videos. You can see down the side here we've had quite a lot of alerts lately. Sometimes though the alerts are just price going up and down over one of the price lines, so one of the pullback lines. So let's get into it. Let's take off the indicator to start with, and then close this on the side, and then we can add the fib to the chart. Okay, if we go over to the fib tool here on the left hand side, if you don't see it, if you click on this little arrow button, then you'll see it down the side here. It's fib retracement. So once we have the fib retracement tool chosen, we want to go to the right hand side of where price is. So not on the candles, we need to be the right hand side. I'm sure you have used these before. Just click down at the bottom and then pull this up to the all-time high. Now what you'll see straight away is that the price is on the left, so the first thing we want to do is just double click, and we can change the value here over to the right hand side, and there you have your pullbacks. The other thing we can do is we can either have the background on, it's a bit nasty, or we can have it completely off. In this situation we're going to have it completely off. Now what we'll notice is these won't be correct because our lowest level here is down at 214. So what we want to do is go into the coordinates. Where it says 214, we want to put that down to 0. And what that'll do is it'll drop the level, the very first level, to where we want it to be, to anchor it down at the bottom. Now we can see at the top we need to make sure that this top line is in line with the high, and that's the all-time high. If you don't put it on the all-time high, we're not going to get the correct pullback levels on it. That's how simple that is. Now, here's the other thing though. You're going to have to put this on every single chart. So if you've got 20, 30 stocks, and you've got your different cryptos on here, you're going to need to do it for each and every one of them. And every time we get a new all-time high, you're going to have to then move your fib to that new all-time high. Maybe you haven't used it for a while, which means you're going to need to make it further to the right hand side, so you're going to have to make that as well. But if you want, what you can do is just take it off, just delete it, and let's just say we've moved on maybe 5 months since then. Just do it all over again. Just click on there, go to your new all-time high, double click on it so it opens the coordinates for you. Put the coordinates now, it's going to be the lowest one, down to 0, and then click OK. Now this is not going to have any alerts like the indicator does, but it's something you can use to check out exactly what pullbacks are happening on every stock and every crypto. Now, I hope that helps. If you want to put alerts on this, you can use the horizontal line at each of these levels and use that as an alert system. Now, just to show you exactly how to do that, go to your horizontal line tool. I'm just going to put this in the middle, even though you should be putting it at the actual level, just so you can see it. Once that line is placed on the chart, go to alert, click the it's either going to be crossing above or below. Instead of the value, we're going to have, horizontal line. Let's just click on that. We need to be clicked on the horizontal line. Go to the alert again. It's going to say horizontal line, and then choose whether you want to cross above and below, or just cross above or cross below. Okay. And then once that's set, and if you go to your notifications, you can see here you can have it via email as well. Play sound, push notifications. So it's entirely up to you exactly how you want that. But that's how you would add an alert using a horizontal line. So once you're set up, you're good to go. Just make sure you put one on each of your stocks. And then once you get that alert, have a look to trade it. Welcome back, traders, to another video with Stocks Trader Pro. And in this video, we're going to be looking at choosing stocks and crypto in TradingView. Now, what we want to do is click down on the screeners button right here. I'm sure this is available with every subscription, but I'm not 100% certain. So just in case it isn't, what I'll do is I'll open this up for you. He's around the top 26 via market cap. I'll scroll down a little bit. So you can pause the video and have a look at all of these different stocks and maybe add them to your different watch lists. There we go. Okay. So what we see here, these ones are via market cap, with Nvidia having the largest market cap at the moment. And what market cap means is it's basically the total value of the company's share price multiplied by the number of shares. So these are the big boys. These are the real players in the market. So they're very liquid. Now, just because they're there doesn't mean you have to trade them. For me, I don't like trading Alibaba. It's just one of those things. I'll go through these and I'll look at them to see which ones are the strong stocks and some of the ones that have a big market cap but also aren't very strong at the moment. And one of these reasons could be because of the sector that they're in. If we look at the sector here for Bank of America, and then we look back to what happened, let's just say in the financial crisis in 2009, we can see we had this huge crash down here. So certain industries are going to have issues depending on what's going on in the world. As we all know about what happened in 2009. Fortunately for me, I wasn't trading at that time. But if I was, I have to be honest, I would have probably been buying in as these crashes happened. I mean, look how far this went down. On one day at the very bottom, it was down at $2.54. I mean, that is just spectacular buying. You could have held on to that all the way back up to around about 50% here, and you would have made yourself an absolute small fortune. We can also have a look at what happened during the COVID pandemic as well, around 2020. Just about every stock came down, and most of them were around about 30%. But there are stocks that just went down and kept on going down. So really we want to be looking at these ways that the market recovered afterwards to say, do I really want to trade that stock? Because some stocks have bounced back really well where others have really struggled. So when you're looking through these different charts, what I would do is I'd have a look at these times where the market crashed completely Have a look to see how far the stock actually fell during those crashes and how quickly it recovered compared to other markets. That'll give you a good idea. Also have a quick look at what's going on. You can use AI these days just to find out, is there any problems, any issues? Do I want to trade this stock? It can give you a really good idea, but at the end of the day, we don't want to be overthinking anything. The strategy will work regardless. Once you buy a stock, you own the stock. So it's only a matter of time with inflation before price gets back to a profitable level. So for you, the process is really simple. We have around about 26 stocks here. Again, I will scroll down. Choose the top 30 or 40 in your market watch. Have a look at them individually. We have Nvidia, that is just going up. We had a beautiful drop and I was definitely buying down here at the 40% level, and price made an all-time high. We knew it was going to do that. This is Nvidia. We can see with Microsoft, again, we've got some good drops, but they all seem to be dropping at the same time, right? Because usually it's the same sectors. So for you, you need to go through each one of these, have a look at them, scroll down, choose the ones that you like, choose the ones that you're interested in as well. Choose different sectors. Don't be trading everything in the same sector. You want to be trading something in health and finance, as well as sort of electronics and technical. So have a look through those. Choose the ones that interest you and put them in your market watch. I'm just going to close the screener for a second and open up my watch list. Now, the only, and this is just me, the only crypto I ever trade is Solana, Ethereum, and Bitcoin. It is your choice if you want to trade other ones, but those are the only stable coins, in my opinion, that are worth trading. Well, at the moment. Let's quickly have a look at an example. Let's use Salesforce, for instance. Look at these huge gaps of trading. These are opportunities we need to be aware of. We have a price here of around about, let's just say 270. That price opened on the next day at 224. Now that is an extraordinary, brilliant place to be buying because of the gap. Rather than buying here, you've got it cheaper here. And that's what we're doing. And then the same as well, some days you will wake up and the price will have jumped. So we need to be checking most days, because we've got here a price that was around about 230 and then it opened up at 250. So again, look at that brilliant jump up, but you're going to get this all the time. This could be a level that you're buying, so you could buy for cheaper here. So you could buy it twice there rather than once there. And then as we go along, we'll see these little gaps in the market going back for years. But it doesn't matter how far you go back, the strategy still remains the same. We buy at each level. So buy, we're selling, we're buying, we're buying, we're selling, we're buying, we're selling, we're selling, and it just works over and over again. And because you're in a number of stocks, not just one or two, that's where the power of the strategy comes in. And remember to always compound all your winnings back into the next trades. That's what we want to do. So set that up, use a little bit of math, use Excel, get yourself set up and start trading these. But again, let's just go through it. We want to be on screener. We want to click this little button here at the top, and then I'm just going to close that off, and then have a look through on the market cap to which ones you want to trade. Again, the top 30 would be very good, but there are some stocks in here I would never touch. So welcome back to the Stocks Trader Pro course, and in this video I'm going to talk about the different trading platforms you can use to follow this strategy. Now, I want to be completely upfront. The platform I use is the one right in front of you and the one that I recommend, which is eToro. It's very easy to use. It supports both stocks and crypto, well, in the UK and other places, and also allows fractional shares, which is essential for scaling into trades at those pullback levels. Now, that said, depending on where you live, whether it's in the US, the UK, or elsewhere, you might also want to consider some different alternatives. In the UK, we can also use these two platforms as well, Trading 212, and then we have Revolut as well. In the US, we have some alternatives here as well. We have Robinhood. We also have Public, which is public.com. And we also have Webull as well. Options. If you can use eToro, then use it. If you can't, then don't. Have a look through all of these different ones for yourself and see which one works for you best. Now remember, when you go through the videos, you're going to see how we trade it. So you must be able to buy fractional shares, take 50% out and then 100% and then reinvest. That's how we work it. Let's have a quick look at some very famous names as well. We can also use Binance. We can also use Coinbase. I'm not so much sure about Binance in the US at the moment. I don't know how that works. We've got Coinbase and of course we've got Kraken. Now there are a lot more out there. I just wanted you to be aware of the ones that I look at, what I consider. But to be honest with you, I always use eToro just because it's simple to use in the UK. But again, we have so many options. Look at the ones that are getting the best deals for you when you're investing. One thing I would like to add to this is really remember that the platform is just the tool. What really matters is how you use it. With the right mindset, the Stocks Trader Pro strategy and a platform that supports fractional shares and partial profits, you're set up for success. So choose the platform that works best for you, get comfortable with it, and then focus on mastering the strategy. That's how you'll build consistency, confidence, and long-term results as an investment trader. So here we are on TradingView. We can see here that we have on Pepsi a pullback or a possible pullback to the 30 line. It's roughly around about 137, so let's say 138. If we put in Pepsi, click trade, we want to put our dollar amount in there. No stop loss, we've got to take profit of 1,000 there. We need to make sure we are on X1. We are not using leverage, so we need to be on X1. And then the other thing we need to do is just drop this down and use a limit order. We can then change our limit order to 138. Again, that is where the 30% pullback is. And all we've got to do is press the buy button. Okay. Then when we look into our portfolio, we can see here, we've got a buy of 100 at 138. Let's look at something different. Let's go back to the watch list here. Let's look at Amazon, for instance. There it is. Let's just say we wanted to trade Amazon at its current price. We would put in the amount again. Then we would use the drop down box. Now if you look at this one here, we've got market order rather than limit order. So basically what that's saying is whatever price Amazon is right now, that's what we're buying at. If we look at Amazon on the chart, where are we? Right here. We'll notice that we're at a pullback of 10%. So if we want to buy here, then we can. The other thing we can do is we can also use the all-time high as the profit target there at 242. So let's do that. Let's put a profit target of 242. Press set. And there we go. We're all set to go. So we'll have an order at the current price, and we'll be getting out at 242 using $100. Now that is only really applicable if we're trading anything that we believe is a very strong market, a very strong stock that will not really pull back much further than the 10%. So we've got to make sure that we're very wise and we understand what we're doing. These types of trades can pull back 20, 30%. So if we're buying here, we're going to buy again here and here, and we're going to take profits on the way back out. So there you go. That's a really quick overview of how to buy using eToro and other software exactly like this. Here we are back on eToro. How do we close a trade? Well, you can see we have all of these trades going on here in the background. I don't know whether you can see them very well. Well, if you go to the right hand side under your portfolio, then you'll see a button that says close. It's always on the right hand side. Once we click that button, we get this screen. Now, what we want to do is, if we want to close the whole trade, we simply press the button and we will come out with exactly 101.09 because it's showing you there. Huge profit of $1.09. But if we want to partially close the trade, all we do, simply click this button, which is what we do a lot, remember, in our trading, and it will set up 50% of that straight away. So it'll tell you exactly how much you're going to be taking out, which will be 50% of the trade plus the profits. Now, obviously, this is just a brand new trade, so it hardly has any profits in it. But once it does, you'll notice a huge difference. And then all we do is close trade, and that's it. We've locked in profits plus we've taken out 50% of our trade. When we want to re-enter, we simply rebuy that trade for the $50 or the £50 or whatever you've committed from your bank account or your trading account. Really simple, really straightforward. That's all you do. Click the close button next to your stock under your portfolio, then click the close only part of the trade. It defaults to 50%, which is awesome for us. Press close trade. Very simple, very straightforward. So here we are on the Tesla chart. It's the daily chart. We can see back in December 2024, we actually hit this all-time high. And then we got this amazing pullback all the way back to this 50% line. Tesla is an absolute solid stock. So when we get a pullback like this, we want to take advantage of it. Now, in most situations, I won't buy at the 10% level. I will only buy at the 20% level down. But we'll use it as an example. What we'll do is we'll have a path and we'll go through each one. So we come down to this level, which is 10%, and we're buying in. Now, let's just say you bought in with $100 there. That's absolutely fine. Then we buy in again at $100 at the 20% line. Now, let's bear in mind here, sometimes we might get a better fill being underneath that, which is absolutely fine. But we're always taking profits at the levels above. 50% off at the first level, 50% off at the second level. We get this nice move up, so we get to take 50% off, and then we get this move back down where we put the trade back on again. So we've taken 50% off, including the profits, and then we've put 50% back on, but we've left the profits in our bank. That's the way we do it. Then we pull down again, and we pull down again. So each time we're pulling to a level, we're buying. We eventually get to this 50% level, and then we're in a lot more. Usually what I would do is, if I'm buying at 20% down, I'll buy, let's just say, I'll make an example, 100, 100, 100, 200, 400. That way I've got a nice amount of money in it, using around about $1,000 to trade this. Then we pull back up, but we don't actually get back up to here until April. And then we are selling at this level. So we're selling 50% of our 50% entry here. So we've got half a cycle completed. Then we move up to this level. And that means we're out with a full cycle from the 50%. We pull back to 40. So we're buying again. We're selling again at this level. We're buying again at this level. This is where it really starts paying off for you. We're buying again at this level. We're selling at this level. we're selling at this level, and we're finally selling at this level. So let's just go through that. We've bought at 10% and we've bought at 20%. We've taken 50% of the 20% trade off, and then we've bought it again, only 50%. So if this was $100, we've sold 50 here, we're back in with another 50 here. So we're only putting in the original amount. We must be clear about that. Then we've bought again here, we've bought again here, and we've bought again here. We've sold off 50% of the 50 trade, and then 100% of the 50 trade at this point. So that is a full cycle for the 50 trade. Now at 40%, we've taken 50% off, we've taken our profits, then we've bought again here. So we've taken, if we're using $100, just because it's an easy example, we've taken 50% of that off, including the profits, and we've put $50 back in. We've kept our profits in our bank. We've then sold here, we've bought here, and then we've sold here again. So we've made some good money on this movement back and forwards from the 40 to the 30. So at this point, we're actually out 50% with our 40% trade, and then we get a full cycle for the 40% trade. So we're out complete with the 40, we're out completely with a 50. Now our 30% trade is 50% out here, and then 100% out when we get here. Now at this point, we've got 50% out from our 20% trade as well. Remember, these are all individual trades at each level. What we can choose to do here, which I did, was take everything out completely. So I took 100% out at 10% because I'm not 100% sure we'll hit an all-time high again. We've come back up, we've tested some levels, which is a little more advanced. We're not going to talk about that in this video. So I thought we'd go out at exactly this point, which was only today. Actually, it was yesterday, or was that Friday? We're out completely at this level, and I didn't take a 10% trade in the first place. But if I did take a 10% trade, I could have went out at break even at this level, making sure that I was out for a full cycle. Now, what do we do once we've got a full cycle out? Well, once we've got a full cycle out, we can reinvest the money. So rather than buying at $100 at each level, we can now buy at maybe 120, 125, 130, all depending. And then you could add extra if you want to do, if you're becoming more and more confident with the way it works. This is how we reinvest the money to make more money. This is just one stock. Imagine doing that over 10 to 20 stocks. Now, it's investment trading for a reason, because we're not in and out of the market every day. We're staying in for a long time. You can only ever lose money if you sell your stock at a loss. We don't do that because we're always buying good, solid, profitable stocks that are going to be around for a long time. That's very simple, very straightforward. That's the strategy. That's how I delivered it. Buying and selling at the right levels, and that's how you're going to do it, and that's how you're going to make really good investment choices. So welcome to the main event. We are on the daily chart for MicroStrategy. If you don't know who MicroStrategy are, they are basically the proxy for Bitcoin. So they're the stock for Bitcoin, because MicroStrategy basically only buys Bitcoin. So when Bitcoin goes up, so does MicroStrategy. Let's have a quick look at this, the strategy. You can see here on the chart we have absolutely nothing. How do we trade a daily chart? Highs and lows? Well, the reality is we simply put on our indicator. So if we click down and we show our indicator here, the indicator will populate and it'll show us the levels. So we have an all-time high. Then we have the levels at 10% going all the way down to 60%. Very straightforward. It starts looking a lot different when we do this. How do we invest and make profits using these lines and the way that the markets naturally move up and down from their all-time highs? Well, it's pretty straightforward, really simple, and if you stick to it, then you will make some very, very nice money out of doing this. So how much do you need to invest? Well, you can invest with as little as $100, £100 per trade. I would always advise to have around about 1,000 available. You don't need it, and it's very rare that you'll need it all the time because you're going to be in and out of the market. So this is MicroStrategy, and this is going back all the way to November 2024. This is the trades I was taking on the way. It's very much, we're looking for pullbacks, and we're looking for them from the all-time high. So let's just quickly walk through what we're going to do. And I'm going to use the Pathfinder to show you that. So here's the all-time high. When we pull back to 10%, we have an option to buy the market. If we did buy the market here, our exit strategy would be at the all-time high again. That is for the 10% rule. It's different for everything else. So we're taking profits as soon as this comes back to the all-time high. Now let's just get rid of this and start it again. And we'll show you exactly how it works when we go down to 20%. So at 10%, let's just say we take a trade, but price does nothing. It pulls back down to 20%. Then we take another trade. Now, each of these are individual trades. They are not the same trade, and we are not accumulating them together. So as price moves down to our 20% level, we are looking to take 50% off, including our profits, at this level, and then another 50% off when we reach this level. Now let's quickly look at that. So what we have here is a 20% pullback, and we're going to take 50% off including profits, and then another 50% off here including profits. We can then reinvest that whole cycle, because this is what we class as a cycle. If we only make 50%, that's half a cycle. Okay, so that's how we're taking profits, but we're going to do it multiple times. So let's go all the way back and let's start again. We start at the all-time high. We pull back to 10%. We don't get a move back up. That trade is still going. We move then down to the 20%, and we can see we didn't get a pull back to the 10%, so we're not going to do anything. Then we move down to the 30% line. At this point, we're now in 3 separate trades. Okay. Now this has happened over a number of days, but it's happened pretty quick because we've reached the all-time high, and we usually get a sell-off from the all-time high. Price has now pulled back up to the 20% level. So that means at the moment we're break even on the 20% level. We're down on the 10%, but we're up on the 30%. Now we're going to take 50% profit out at this level, including our profits and what we put in. So for instance, if we put in $100 there, we're going to take $50 out plus our profits at this level. Now price has pulled back, so what we do is we're going to reinvest the $50, so we're now back in with $100 for the 30% level. As we move up again and we reach the 20%, we take 50% out again, including the profits, and then as we pull back, we reinvest just the $50 or £50. Now you can see we didn't pull back up there, but we've already made money here and here. As price pulls back, we reach the 40% line. We put another $100, £100 in. We move back up and we take 50% out at that trade. We pull back down, we reinvest it, we pull back up, and we get 50% out again. We pull back down, we're 50% back in. So now at this point, we have the 40%, 30%, 20%, and 10% trades in. So if that was a total budget of 100 each time, we'd be in with £400 or $400. We then pull back again and we get down to the 50% level. Now at this point, I am doubling the amount of money that's in there. So I'm putting in 200 rather than 100. Price doesn't pull back here yet. In fact, it moves a little bit lower, but then eventually gets up to here. So we're taking 50% out of this trade, including the profits, but then we pull back. We're back in with the other 50%. So we're now at $200 for this one, 100, 100, 100, and 100. Then we move back up to this point here. At this point, we've then taken 50% out for the 50% trade. And as we reach up to the 30%, we hit a full cycle. A full cycle is when our trade completes 2 levels. So at this point now we are out with 50% at this level, 50% at this level, which is 100%. But for our 40% trade, we're also out at 50%, including the profits. We haven't had a pullback. We don't manage to reach the next level. So nothing's happened at the moment until this point here. So at this point, we're taking out 50% of our 30 and 100% of our 40. So our 40% has now hit a cycle. It's went 2 levels up. We've taken all of our profits out, and we've taken 50% of the 30% trade. We get another pullback here. So we're back in with 100% for this trade and another pullback here. So we're back in with a full trade at this point. So this is where we are with MicroStrategy at the moment. So at the moment, let's just stop that one there. We've now taken profits for our 50%, our 40%, our 30%. We're back in full with our 30%, and we've rebought at our 40% level. So that's 100, 100, 100, 200, 400. Sorry. 100, 100, 100, 100, 200, and 400. That's how we work it. If price pops down further than 60%, we do nothing. We wait until price comes back up again. That is the strategy. We buy as we pull back to each level, and we sell 50% as we move up for each trade for each level. Now, as we can see at the moment with MicroStrategy, we're still at the 40% line, and we're going to do nothing. If price pulls back down to the 50%, we'll put 200 back in. If it ever pulls back to 60%, we'll put 400 in. We're investment traders. So we don't worry how long it takes. We know that MicroStrategy is an absolutely solid stock. It's based on Bitcoin. They're a very high volatility cryptocurrency, but we're hitting new highs every single year with Bitcoin. So using this strategy and using MicroStrategy as well, we're around about here at the 40% line, and we're in with 3 trades. 1, 2, 3, actually 4 trades if you went in at 10%. Now let me talk about 10%. I rarely use a 10% trade. I very rarely buy a 10% trade because I want price to pull back to at least 20%. The reason being is you don't get the same profits out of 10% as what you do with the 20% and the 30, the 40, the 50 and the 60, because you've only got one level to go back up to. There are some stocks which we will talk about in a different video that we use 10% for all the time, because they only ever pull back to 10%. Some stocks will never pull back to 30%. Some will never pull back to 40. Some will never pull back to 50. And some will definitely never pull back to 60. This is just a good example of how we trade this stock. Our end goal, if we ended up at taking a trade at the 10% level, is to get back to the all-time high and complete a full cycle of every trade. So we would be out at this point. What we can do, if we are in at 10% and we reach there, we can go out completely, close all the trades, reinvest the money once we get to another all-time high or we get a pullback. Now we're only ever trading pullbacks. So that's the strategy. Watch the other videos on Tesla and the cryptocurrencies as well to show exactly how we trade them for different stocks. There are going to be updates every single month to show exactly what we're doing and how we're doing it. But this is the strategy. We buy at the levels of the pullbacks and we sell on the way back up. Could we sell Different ways? Absolutely we can. But in this video, this is the main strategy that I use to make profits every single year in the stock market. You've got to think like a trader, like an investment trader, and you've got to trade like an investment trader. This is not day trading. This is not intraday trading. This is trading over a long span of time and making profits every week, using those profits to compound what you were doing, using those profits to then put back in. So rather than using 100 at each level, maybe you'll start using 120, 130, 140, 200. It all works on what you make with your profits. Now remember, you should only ever invest what you're willing to lose. So don't go in here with $1,000 and $1,000 if you don't have the ability to keep the momentum of those trades going. Otherwise, you're going to find yourself in trouble. Watch the other videos, keep trading the plan, and you will be very, very successful over the years, just like I have. Welcome back, traders, to another video. Let's have a look at this. This is Coca-Cola on the daily chart. And we can see that it just seems to constantly go up. I mean, if we bought here and we sold up here, have we made a lot of money? Of course we have. And in some situations, you can hold onto your trades. But just looking at the chart, there are many, many opportunities to make money. This goes back all the way to 2023 here. And we can see that the price has gone up. Why does price constantly go up? Simple, inflation. That's what it comes down to, especially when you've got a product as strong as Coca-Cola. Very simple as that. So it's the same with ES and NQ. It's a very strong product and it's going to just keep on going up naturally over the years. So we take advantage of those pullbacks. And what we can do on these pullbacks, because we know that's such a strong stock, we can maybe add a little bit more. So for instance, if you were trading $100 per level, you could then trade maybe $200, $300, $400. It's entirely up to you. If you were trading 1,000, you could double that as well. It all depends on how deep your pockets are. But you can see here, we get this pullback to the 30, then we go back up to the 20, eventually back up to make new highs. Then we get these pullbacks to 10%. So these are the types of stocks where you can quite realistically and profitably take trades at 10%. You know, you hear me say it on some stocks, I wait for 20%. This is the type of stock I'd be quite happy because it's a very, very strong stock. It's a very strong company. It's going to continue to go up over time. So we can see all these different pullbacks and we can just constantly making money, pulling back to 10%, pulling back to 20%, back up to all-time highs, back to 10%, back to 20%, and we're looking for price to possibly come back to the 30 for another entry. So I'm in this stock at the moment at 20%. I've been in this stock over the last couple of years, buying and selling, but at much larger amounts. These are the ones that we look for, and we do have a list of these, and we'll talk about this on the monthly updates every month to give you that convenience, that confidence to go in and to consider it. Can price fall all the way back down to 60%? Absolutely. We do not know what crisis is round the corner. That's why we only ever invest what we can afford to lose. That is our mantra and that's what we stick to. But we're very good at what we do because we have one plan and we stick to it. So this is just a quick video to go over Coca-Cola to show you what a powerful and strong stock can do over years, but also to use it to our advantage. We know it will pull back. It has to pull back. So we take advantage of every pullback when we get a really strong stock like this one and many others. And we'll go through that list and we will have that list available for you. Welcome back, traders. We're on the daily chart. It's Sol USD cryptocurrency, and we can see exactly how this one played out. So again, I was trading this all of 2025 up to the current date, and I am still in with a couple of trades on this one. Let's mark out exactly how it played out, the same way as we did last time. We'll choose our Pathfinder and we'll go right from the top here. And as you can see, at this level, if you'd bought at 10%, I would never buy at 10% when it comes to crypto, but you can. So that's entirely your choice. So if we did, we'll play it by that rule. We bought at this level. We've never went back to the all-time high. So we've bought again at this level here, and then we sold at this level. So we sold half of it as usual, and then we come back down, we buy again, and we sell because this candle goes back up. Then we buy, then we sell here, and we buy again as price comes back down. We buy again here, we sell here, we buy again here, we sell here, and we sell here. At this point, we're now out of that 50% trade. So there's a full cycle. We then pull back. So we're buying again, then we sell, then we sell, then we buy, then we sell, then we buy, then we sell, then we sell, and then recently we've just bought again. So this is where the trade is currently at. So we've bought in there. So let's just take that off there. And we see very much like the Tesla video. It's very similar with the way that we get this big pullback, and then we go back up all the way down to the 60% line, even further. Then we pull back up, and we haven't made all-time highs yet. And we may not do either at this point. So let's just go through it again. If we were buying at 10%, we bought again here. Then we bought here and we sold here. Now remember, we are always selling 50% back at the level up, and the final 50%, which is a full cycle, when we get to 2 levels up. We pull back, we buy again. We pull back, we buy again. We pull back, we buy again, then we sell. Then we buy, and we sell again here. We buy again, and we're selling and buying and selling and selling and buying. So at the moment, we are completely out of the 60% retracement because we've moved back up 2 levels up to the 40%. That's a full cycle. Our 40% trade is out at 30. Our 30% trade is now out at 20. But now we've bought back in to the 40% trade is now back out at the 20%, and our 30% trade here is 50% out. And we won't take the full profits out of that until we reach up to 10%. But as you can see here, we've pulled back anyway, so we're still back in with a full trade for the 30% line. Let's have a little look back further on this cryptocurrency, because if you know anything about Sol, it had a huge pullback, which pulled back way back to something like $7 a long time ago. I think it was in 24, and because of that we get this move back up. Now what happens if we get a situation like this? Well, in this situation we're only buying pullbacks, remember that. So we want price to go up to a level and then pull back again. Now you can see it never did this at this point, but it moved up, and then it moved up, and then it pulled back. So there's an opportunity to buy there. Then there's an opportunity to buy here, sell here, buy here, sell here, sell here. And as you can see, we're going back up and down, buying and selling as we go. And this is how we make a lot of profits. We're investment traders. We don't look to take trades every day, but sometimes there are opportunities every single day. We're in the market when we should be in the market, and only when we should be in the market. We're always looking for price to get to that new high, the all-time high up here. As you can see, we made one here. We came back, we bought again, we bought again, we sold, we bought again, we sold, we're back at the all-time high. And then we repeat the whole cycle again. So that's Solano. That's on the daily chart, as you can see here. We've just got a pullback on AVGO of a 10%, and that's how the alert system works. This will be sent to your phone as well, and it can be sent to your phone via the TradingView app and also via an email. I have both set up in case I miss one of them. So that's great, and obviously you're getting this on your charts if you're behind your computer as well. So looking at the charts, we only buy stocks or crypto that we are comfortable with, and we need to do a little bit of research on that. So because we're good traders, we're very focused on that, and we work together to make sure that the best stocks, the best crypto are always traded. Can we trade any stock, any crypto? Absolutely, that is completely your choice, but we always want to use the best stocks and crypto. We can even trade gold if we wanted to, and we can also trade other things, but really we're focused on which ones are going to move best, which ones are we going to get good pullbacks on, which ones can we make the most money on. So keep focused, keep trading, and stick to your plan. Hello traders, and welcome to another video in the series. And in this video we're going to talk about risk and risk management. Now, the one thing we have to be absolutely clear on is that any stock can go to zero. Therefore, we can only ever invest what we can afford to lose. Absolutely key, whether that's 1,000, 500 or 100, then that's entirely down to you and your bank allocation. So looking at the trading risk management, we've discussed it before. If we were trading 1,000, then we'd be looking at 100 here at 10%, 100 at 20, 100 at 30, 100 at 40, 200 at 50 and 400 at 60. Now we can see here we've also got the allocations down here as well for a 500 pound or dollar bank, and also the same for a 100. If you are new to trading, please start with 100, no more than that, and make sure you have a broker that allows you to put in just $10 to buy a fraction of a stock. The other thing we can talk about as well, what we do not ever want to do is to add to negative investments. So let's just say our price pulls all the way back down here and never comes back and triggers one of our take profit levels. That's absolutely fine. We don't start allocating additional money to that pot just so we can get out early. We are investment traders, and therefore we can hold on for much longer than an intraday trader. We can also look at our tracking sheet and figure out when we can go break even on a trade. That means closing all trades within that stock. And of course we can go to break even once we get back to our level. So for instance, if we pulled back to the 20, we took an entry and we pulled back a little bit further and we didn't want to stay in that stock or that trade for much longer, we can either take a small hit or we can wait for price to come back up to our 20% level plus a little bit more if you wanted to, and we could break even on that. At any time you can close out a full trade. It doesn't matter how many levels that you were in. Again, if you can afford to invest it, then you can afford to lose it. There wouldn't be many situations where you would need to do that, but that is your choice. If you feel that you want to close that trade because you've heard there is going to be absolutely shocking news regarding that stock and you want to get out while you can, then you can do that as well. But just looking at the way that we trade, the way that we invest, we look at our allocation, we look at the bank, we look at the risk, we know what not to do, we know when we can break even, and we know when to enter and exit the breaks. So exactly as we've discussed it before, we buy at the levels and we sell when we go back up. Very simple, very straightforward. If you ever decided to close that trade completely, please make sure that you have really researched it and have an absolute concrete reason why you would want to close a full trade when maybe you are halfway through your bank, let's say $500 or pounds into it. Make sure you've done some full research on that before you do that. So good luck with your trading, and I welcome any feedback or any questions. So here we are on the daily chart. This is the Spider S&P 500 chart, basically the ES, and you can see it's very rare that we get pullbacks. So when we do, we take advantage of them. As you can see here, we've pulled back to the 10%, then the 20%. For me, I do place a lot more on these trades, but that all depends on your trading plan and how you want to trade it. If we look further back, it was back in 2022 to 2023 that we got these pullbacks. It's very rare, and then we have to go back even further to get a 30% pullback. So in the S&P 500, we want to be taking advantage of every pullback that we see. The same as the Nasdaq, which is the QQQ. We take advantage of them every time they pull back. But again, we trade smart. You have a trading plan. Stick to your trading plan. Never over leverage, and make sure that you have funds available to be in at the next trade if it ever pulls back that far. One of these trades would be the pullback to the 10%. We always take profits when we get to the all-time high. If you want to, and if this is in your trading plan, you can just hold on to every 10%, every 20%, every 30% pullback, and just allow that to continue to grow. But we're investment traders, so therefore we take profits and we buy at every opportunity when there is one in the market, especially on the Spider and the NQ as well. So welcome back to the Stocks Trader Pro course. In this video, we're going to shift our mind away from the technical side of the trading and talk about something just as important, your mindset as an investment trader. This mindset is completely different from the fast-paced world of day trading currencies, futures and stocks. We can see here we're on this Tesla daily chart, and we've been trading it, taking profits, entering trades again, taking profits, but then something like this happens and we have this huge pullback. Do we go into panic mode? Absolutely no, we don't. And there's many different reasons for it. As investment traders, we understand one thing above all: patience. We know that profits don't come instantly, there won't be trades every single day, and there won't be profits every single day. Instead, we're looking at the market on a much wider scale, weeks, months, and even longer, depending on how many stocks you're actually trading. So again, if you're looking at your watch list and we go down the right hand side, you might be trading just 3 or 4 stocks. If you're only trading 3 or 4 stocks, then obviously you're not going to get as many entries and exits if you were trading 5, 6, 10, 20 stocks. And it's really, really important to be aware of that, because you won't be getting alerts every day, but that mindset has to be the same every single day. Another thing we need to be focused on is discipline and risk. So another crucial part of mindset is discipline. We never want to over leverage our personal funds. You always need to have enough in the pot for the next opportunity. That way, when the market gives you a right setup, you're ready to take advantage without hesitation. What we don't want is a situation where we have bought here and here and here, but we have no funds to buy here and here. We need to make sure we can follow this all the way down. So if you can't afford to put $100, £100 at each level or even more, then think about how much you can actually put in. That won't over leverage you. Because if you don't, then you're going to find yourself in a situation where you're missing out on really, really good opportunities. Another thing that comes to mind when I'm speaking about mindset is we need to have that mindset that we own the stock. So every time we buy in at a different level, we own that stock. So whether it's shown in profit or sitting there in the red, it's ours. That means we can hold on for the long run, confident that the strategy will bring it back to break even or even into profit over time, which 9 times out of 10, maybe even close to 10 times out of 10, it will do. That is the power of the investment trader's mindset. And we really need to have that. We can't be expecting for everything to go our way every single day. We are in for the long haul. Sometimes we could be in for months. Very, very rarely it's more than that because we're in and out of the market. Don't look at any of your individual trades as being a losing trade. It's just not ready to take profit yet. And we really need to make sure we have that mindset. So remember, patience, discipline, and long-term focus. That's what separates us, an investment trader, from the short-term crowd. With this mindset, you'll not only survive the markets, you'll actually thrive in the markets. So welcome back to another video for Stocks Trader Pro. I need to fill this in as yellow just so I can highlight it for you. So the yellow sections are the sections that you need to fill in on this Excel document. Now this is your tracker. You can use it or not use it. It is entirely up to you. So we have the trade ID there. We can see I've already got that wrong. The ticker, which is your stock on your crypto. The all-time high, which you need to put in there, and the entry price. We then have the pullback ratio, which is worked out for you, and also the quantity. So if we've bought AMD for $100, then that's the ratio of the actual stock that you've bought. Then we have an exit 1 and exit 2 price. We have the quantity for your exit as well, which works it out for you in case you need that, and also your profit at each exit. Now you can see the total profit here, but what is also important is the half cycles. So every time we take a profit, let's just say we're in the trade and we are at 30%. Now that pulls back half a cycle, so it pulls back to 20%. Then we need to add those cycles into here. Okay, that's only if it comes back and then hits the 30% again. So if it does that, we then want to put that cycle in there. Let's just say that was 1. We've completed an additional half cycle. Now if the trade then goes back up and it hits the 20% line again and then pulls back to the 30, then again we need to put that in as another half cycle. That way we get a total profit and loss, so that we get the cycles plus the full cycle. So these are half cycles plus the full cycle, and we get the full profit and loss there. Now on some occasions you might just hit 30% pullback and it'll go on and do a full cycle for you. Then this is the profit and loss you would use, but it'll also show there as well, because if we've got a 0 in here, then it's going to show you the same calculation. It's a really quick way, rather than adding additional trades under here and making this Excel document extremely long, which we don't want. We simply put our half cycles in there. And that's a great way for working everything out. So very simple and straightforward. If you want to add something else in here, let's just say you have different brokers. You can add a broker in there. Let's just say it was eToro. Spelled that wrong. And maybe Trading 212. Maybe Robinhood, whatever it is that you're using. Then obviously add that in there. You can do what you want, just be careful not to mess the formulas up. So again, really important, the half cycles go in here, but if you don't have a half cycle and it just goes to hit your first profit target, then second, then obviously you wouldn't put anything in there. This is only for additional half cycles. Hello traders, and welcome to another video in the series. Today, by popular demand, I have been asked to do a video basically on crypto. Now, why I keep saying I only trade certain cryptos? Well, you'll see as we go through it. When we go through Bitcoin, we can see these lovely pullbacks, and at the moment it looks like we're pulling back to a nice 20% line. Ethereum, we've already hit that 20. Now you can see the profits we've taken on the way up for this one. Sol, again, we had some great moves in Sol. I mean, if we look at Sol, it's one of the great ones to trade at the moment. We were buying, we were selling, we were selling, we were buying, we were selling, buying and selling, then selling again, then buying, then selling, then buying. We bought again down at the 40%, and then we sold back up at the 30, and we came back to hit the 40 today. Now, if you weren't awake, you might have missed this, but really what we should be doing, if we see a candle like this, let me just take this little pointer off. If we see a candle like this, then we really want to be putting our purchase order, our buy order, right here at 177. So we can make sure that we don't miss it, because we don't want to miss trades. And this is going to be a great trade as well. Expecting it to pop back up to 30 and 20 at the minimum. We need to hit these highs. We'll talk about different strategies and different ways to look at the market, but just using the indicator, this is where we're expecting price to get back up to. Will it get back up to the 10% and the all-time high? It will eventually. Could take some time, but as you can see, that was a great trade. Well, a number of great trades, and that, you know, offsets the ROI a lot. If we were just in one trade and it just hit our target, that's not going to make a difference to when we actually coming up and hitting the levels, coming back, buying them, selling them, buying them. This is what the stocks trader investment strategy is all about, and that's our mindset. We're not intraday trainers, we are day traders. When I say that is, we trade the daily chart. Let's have a look at Binance. BNB, we got a lovely pullback here to the 20%, a great place to buy. Now, as you know, I don't usually trade this, but I have added it. I'm not a big fan of trading Binance, but I will have a look at it. I will consider it, and if we get a pullback to 30%, I'll definitely consider taking a trade. But when I'm doing that, I'm thinking more about advanced reasons to get into the market, not just the indicator. Now let's look at the rest of them. Would I trade XRP? I'm going to be honest with you, I just don't want to touch it. I don't want to touch it whatsoever. We can see it's got an all-time high here of just over £3.70 or $3.70 it should be, and then we've had these pullbacks. So, you know, you could be in the market, but I have no idea when this price will ever go up again, if it does. So I'm not confident with that. Then we look at these cryptos. I mean, just look at the state of that. The all-time high is way back in 2021. Since then, it's pulled down. It's never got back above the 60% line. You'd be better off selling this rather than buying it, but we don't sell with our strategy. So this is the reason why we wouldn't be touching coins like ADA, Dodge. Again, I'm just not a fan. We've got Polkadot. Look at it, it's way below again. Litecoin, I used to own Litecoins, sold them off when they got back to about $100, and then I've never touched them ever since. And again, I would never trade them. Look at the state of that. Just going through these different ones, we can see they are really not worth trading. The reason they're not worth trading is because they're not strong cryptocurrencies. They basically hit these highs and then they pull right back, and then a little bit of bad news absolutely destroys them. So if you want to trade them, you can trade them, but you wouldn't want to trade them using the Stocks Trader Pro strategy. Just going through some of these as Tron. We have all these different ones. I mean, look at this one. EOS is just dying. Every one of them just flat to the floor. So really, we only want to be looking at markets that are strong, whether it's crypto or whether it's stocks. As we can see here, going back to Bitcoin, I mean, this was back in 2025, the beginning of the year. We had some lovely moves. We got that all-time high, pulled back to 10, 20, 30, and then look at this move back up. Beautiful. We kept on coming back, hitting this 10% line, back to the all-time high. These are the three that I would trade. I would consider this one, but that's entirely up to you. But I want to see a bigger pullback in Binance because it's a company rather than a crypto coin. But what exactly do I mean by that? Well, Binance Coin is more of a token that's native to the Binance ecosystem. So it's primarily used for paying fees on the Binance exchange and for other services within its platform. So it's different to what Bitcoin, ETH and Sol are. So that's why, you know, if the whole Binance company has issues around the world, then you're going to see this coin just go flat on its face. So I'm always concerned. I wouldn't put big money on this. However, it's done well for itself. I remember when it was back down at something like $30 when I was looking at it. And that was a long time ago. Let's have a look how far back we're talking. So when I was looking at this, it was around about $35. So that's the year sort of 2021. And then we had this massive surge up. And because of cryptocurrency doing so well, a crypto company like Binance is going to do well. And so is a company like Coinbase and other people like that. But it's entirely up to you if you want to trade it. If I'm going to trade this, I'd like to see a nice pullback. I'm watching it. Will it get back to 30%? Will it get back to 40%? I'd like to buy down this area, but it wouldn't be with much. So going back to it again, these are just rubbish down the right hand side. Please don't trade them. But if you do, you wouldn't be able to trade them with my system anyway. Keep an eye on these three and consider the Binance one as well. Okay. Hello traders, and welcome back to another video in the series. I wanted to show you something quite special today on AMD. We're on the daily chart. We bought in at the 30% level, and today we moved up, which is from the 30% all the way up to the all-time high. So look at this huge jump in the market. That means rather than taking 50% out here at 20 and 50% out here at 10, we had an opportunity to take everything out at 3 levels above. Now, to be fair, let's just jump down to, let's say, the 15-minute chart on this for a second. If you weren't monitoring your charts at the time, maybe you were out. Within the first 15 minutes, we had this pullback all the way down to around about 215. So if you weren't available for the first 15 minutes of the market opening, then you would have missed this. Within the first half an hour, we came just about back to 10%, but which is great because that means that we take not level 1 profits, we take everything at level 2. So that's 100% out at level 2, but price has just bounced around like this. So it's not often we get these huge jumps in the market, but when we do, it's an opportunity to get out quickly with the trade and make some fantastic profits. So you don't just make 10%, 20%, 25%. Sometimes you can make 30, 40 and even 50% in these markets. But that's the difference between us and intraday traders. We're here for the long haul. If we look back, this goes all the way back to 2024. And we were making money on the pullbacks, then taking money back, Then we were buying and buying, selling, buying, selling, buying, and then we had this huge pullback. Then we started selling around about May time, April, May in 2025, and it's just went up since that point. We've got another lovely buy here. We sold here, we got another buy here, and then look what happened today. Just a fantastic move. So look through the charts sometime and have a look. It doesn't just work on selling and making profits, it also happens when you're buying. So let's just say we have a pullback, for instance. On here, let's just say we hadn't bought at this point. We had this huge gap in the market here again. So rather than buying here at the 92 mark, we end up buying, if we got the low of it, 85.44. So we can make up more profits by buying underneath. And we see this happening all the time. So let's just have a quick look at that. We see it happening here. We get a price close and then it closes below again. Now let's just say you weren't around that day. You were on holiday somewhere. In fact, you missed those 2 days. You still want to be buying down here at the 127 level, but claiming that as your 40% level, because then we'll buy again here. So this is going to give you extra profits. Now don't wait. I would say if you're in the market, you're watching your charts, don't wait for this to pull further back just to buy at the 40%. That's not how we play it. This is only when things either jump over the levels or you miss it for a couple of days. It's just a great way of making extra money and being able to trade it and get those additional profits in the market. You can see here we get these gaps all the time in the markets, opening and closing during each day, and these little profits. Here's another one here. Now we didn't quite reach it at 112, but we reached it at 117, so we've made additional profits here as well. So it's just a fantastic way to add to your profits by being patient and taking the trades as they appear. When the alert happens, and as you can see over here, I just want to show you the alerts on mine. There are plenty of alerts to work with depending on your market watch. So again, I just wanted to show you that today. What a fantastic trade. I looked at it, I caught it around about 215. So we made profits all the way down from 159 all the way up to 215. Then we took that profits and we've banked it. And now I'm looking for the next trade.